or welcome back to Sectors Made Simple. If you're new here, my name is Jonathan. I am one of the owners and content creators here at Sectors Made Simple, and we are a company that has one single goal: make tools and education to make the world of investing simpler. The reality of it is, there is a lot of big money in the world of investing, and there's also a lot of little guys that want to learn the basics of it so that they can make their money work for them. So hopefully, you're interested in that. You want to find ways to make your money work for you. And that can be kind of tricky sometimes, especially if the stock market isn't doing well or if things are uncertain. When things get strange in the market, that's when it really pays off to have a valuable set of tools and education to help you along the way. And that's exactly our goal here at Sectors Made Simple: provide you tools and education all in one place, regardless of your skill level, amount you're investing, or anything. So today, I want to use this time to show off a little bit about the tools that we offer here and get to talk a little bit with you all about what we have planned for the month of May. Also, like we call it here, Matrix, Maytrix. So let's dive straight into what I want to cover with you all today. This is recorded live, so if you have any questions here, please feel free to put them in chat. You can ask your question in English, o si prefieres preguntarme en español, puedes hacerlo también. Just so you're kind of figuring out what's going on here, there is Spanish subtitles at the bottom of these videos. We do a lot of Spanish content. We are a completely bilingual company. All of our websites, all of our tools, and all of our education is aimed to be offered in English with subtitles in Spanish or directly in Spanish as well. So you can always ask me any question you want in either language. Quick disclaimer, I'm going to talk today about different ways of using our tools. Please remember, whenever I'm talking about these tools and the ways they can be used, they are educational examples. Past results can never guarantee future performance, which is why it is very important that you do your own research prior to making any investment decisions. So today's topic is very straightforward. I want to show off a little bit. I want to talk about Sectors Made Simple's tools and give you a little bit of a walkthrough about what they do and how they work. So for each one of these tools, we'll take a look at what the goal of that tool is, what information that tool uses, what kind of investments the tool can help with, and an example of using that tool live on our dashboard. Let's just dive straight in. So before we get to the tools, welcome to Matrix. As I mentioned before, this is a period of time that we use to celebrate the world of investing, celebrate the tools that we've created, and the education that we provide. But it is more than just a pun. We wanted to create a theme for this May where all of our content and everything we're doing is in service of that theme. And what better theme than positivity? There is so much nonsense in the market right now, and so much uncertainty and negativity as well. And we wanted to try and get away from that. There's plenty of content about that online. Let's focus instead on what we can do as investors to learn about what's happening, invest through the craziness, and most importantly, figure out what we do when things start to turn around. So we have tons of awesome content planned for you all throughout May. So I wanted to highlight some of the bigger things. For current Sectors Made Simple subscribers, we're going to be adding some amazing updates to the dashboard. Some of our tools will be getting more information. We'll be providing you all with a little bit more analysis and more insights about the market, and plenty more. Also, the tools and education, or the analysis that we'll be doing, will be focusing on tracking the stock market's recovery, highlighting companies that have beat the odds and outperformed the stock market when the market was going down, as well as different ways and techniques that we can track when the market's starting to recover and buy in as the recovery starts. If you don't have a Sectors Made Simple subscription, there's still tons that you can enjoy around Sectors Made Simple throughout Matrix. All of our English and Spanish webinars for the month of May are completely free to join. So webinars like this, where we'll tackle an investment topic of some sort. And again, all of those webinars are going to be focused on positivity and investing through uncertain times, which is fairly applicable for what's going on right now. Also, if you don't already have a subscription, there is going to be a couple of different promotions and special offers that we'll provide throughout the month, including some limited time access to our dashboard so you can try these tools out for yourself. And then also, all of our webinar content is available to you all already. Typically, whenever we do a members webinar, it is recorded and we upload it on our Learn site or our webinar site. These recordings can be watched at any time. However, you do need a subscription to watch them. For May, no need. You can enjoy all of our recorded webinars, which is a little bit over 400 hours of webinars, but don't worry, we have playlists to make it easier and ways that you can dive into that content on your own without having to get too overwhelmed. I'll talk about that more later. But for now, let's get into the tools. So, the dashboard. This is the home for all of our tools. It is dash.sectorsmadesimple.com. You do need a subscription to be able to access this, unless you have the limited time access, which will be coming later on in May. This is where you can find all of the investment tools that we've created. These tools follow a couple of common themes, and I wanted to touch on those themes so that when the names come up, you know what we're talking about. The first is point and figure charting, support and resistance, relative strength, and market sector. These four themes are kind of the bread and butter of everything that we've built here at Sectors Made Simple. And the beautiful thing is, you don't need a PhD on any of them to take advantage of the information. The whole point of our tools is to simplify that. Want to take advantage of why point and figure charts are great, but you don't want to learn how to read them? We make that easy. Now, I do quickly want to touch on these four topics. So if they are brand new ideas to you, you know the basics. Do you actually need to remember them? Is there going to be a test at the end? No. But I want you to be familiar with the topic. So let's quickly touch on all four of these, starting off with point and figure charting. Most stock charts work by tracking price over time. Point and figure is different. Instead of tracking price over time, it tracks price trends. Each column in a point and figure chart, you think about a candlestick chart, all of the vertical lines, those on a candlestick chart are days. In point and figure, they're trends. We can see a positive trend because it'll be a column of X's, kind of like this. And to be able to show time, what we do is we'll put a little red number or letter to show when a month starts. So 1 through 9 represent January through September, A through C, October, November, December. So if you saw something like this, you would know that this chart is now in March, and then the continuation of that column is in March. Over time, we'll be adding alternating columns of X's and then O's, and it will end up looking, pretty detailed. But the whole point of it is that we can see exactly where trends started and ended. Kind of like this. What we can see is that there was a column that started in December, C. Then the trend went up into January, up to $166. Then started going down from there down to 160, then back up to 170. That's the general way that point and figure works. Now, something that is not unique to point and figure, but often goes hand in hand with it, is the idea of support and resistance. When a trend stops and changes direction, it leaves behind the price where that reversal occurred. For example, the first column of X's in this chart reversed at $166. That gives us a resistance barrier at 166. Meanwhile, the O's, see where, because we go up, stopped at 166, and then the price went down. The O's stopped at 160. So that would give us a support barrier at 160. This idea of support and resistance is very, very straightforward. Where did a trend stop? Because it is really important to us to know where these resistance and support barriers are, because we want to know when the price goes above the resistance barrier, known as a breakout, or below the support barrier, known as a breakdown. In the example of this chart, that's kind of starting to look like a green, white, and red flag. We can see that the price went up, then down, leaving behind a resistance barrier, went back up, leaving behind a support barrier, and then broke out above its resistance. This, in point and figure, is known as a buy signal. Then we have relative strength. If we want to be able to say what company is stronger, Microsoft or Apple, there are a lot of ways we can do it. But one of the simplest is compare their prices. So if we take the price of Apple and divide it by the price of Microsoft, we get a ratio of their prices. If we track this ratio over time, then the ratio or the number is going to go up or down. If the number goes up, investment A is doing better than investment B. Apple would be doing better than Microsoft. If the number goes down, B is doing better than A. Now, the really cool thing is that we can take the two concepts that we just learned about, point and figure charting and support and resistance, where if we track the changes in this relative strength over time, the X's and O's become our short-term strength, and our breakouts and breakdowns become long-term strength. So for any given comparison of companies, Apple versus Microsoft, we could say, actually, let's not say, let's do. Let's go over to stock charts and check out a relative strength chart together. We can go here and do Apple, Microsoft to compare the two. And this is their point and figure chart. If we dodge all of the ads left, right, and center, what we get is their comparison. Right now, we can see it's in a column of O's, meaning Microsoft is outperforming Apple. Apple's the first thing, Microsoft is the second. So column of O means that Microsoft is winning short term. But long term, we have a breakdown. Right now, our column of O's is below the previous column of O's. That is a breakdown. So right there, we now know that Microsoft is beating Apple short term and long term. Pretty cool, right? And again, the beautiful thing here is you don't really need to worry about doing these calculations or this analysis yourself. We do it all for you. The last thing for us to talk about are market sectors. Every company can be grouped based on what they do. Pretty simple idea, right? To make it really easy, there are 11 different market sectors. and every company belongs to only one of those sectors. Some are pretty straightforward. Apple belongs in technology. Microsoft, technology. Nvidia, technology. Some are a little bit more strange. Meta, communication services. Google, communication services. So the whole point of this is that if we track the sectors, most of a company's price change follows the sector. So if the sector is going up, the reality is the majority of the companies in that sector are probably going in the same direction. So these can be a great way of not only tracking what's changing in the market and where, but also allowing us to invest directly in that sector. Do you want to buy technology companies? You sure can go through and buy Microsoft, Nvidia, AMD, TSMC, go down the list. Or you buy the gift basket of technology companies, XLK. That single ETF will have technology all wrapped into a neat little basket with a nice bow on top for you. So not only are these ETFs awesome for making it easy to invest directly into an area of the market you might like, it also makes it really easy for us to use something like relative strength to compare different areas of the market and find what area is doing the best. You're starting to see how all of these four ideas can come together. Which leads us to the first tool on the dashboard, the sector summary page, with its main kind of marquee item, the matrix, hence where the name matrix comes from. The goal of the matrix is to find and rank the 11 market sectors. What we do is every day we look at the 11 sector ETFs and we add in the S&P 500 ETF SPY. So 11 different pieces of the S&P 500 plus SPY for balance. And then we use relative strength to create every combination, every pair of those different ETFs to find which ones are winning short-term and long-term. Obviously, if you have 12 investments, one investment can be compared to 11 others. For every one of these 11 comparisons, we give them a win or a loss. Short-term, a win would be if the relative strength chart is in a column of X's. A loss would be a column of O's. Long-term is if it's in a breakout, it's a win, or breakdown if it's a loss. Total count is the number of short-term wins plus the number of long-term wins. So if we look here on the right, XLK is technology because of course there's TEK technology. XLK has a long-term strength of 9, meaning 9 of its relative strength charts are in wins. 10 for short-term strength, meaning 10 of the 11 charts are in short-term wins, giving it a total score of 19. If we were to order this based on highest to lowest strength, we would see technology is currently the leader. The beautiful thing about this is that these scores are updated every single day. Any matrix is always a picture of what relative strength looked like on that day. So this right here is what the matrix, this is what relative strength looked like as of market close yesterday, May 5th. But we also have the ability to see how the matrix is changing over time in what we call momentum. Momentum lets us compare today's matrix against one from the past, where we can see which ones have gained or which sectors have gained or lost strength. Positive numbers in green tell us that that sector has gained strength, while negative numbers in red tell us that that sector has lost strength. So for example, here we can see that compared to 1 week ago, technology gained 6 total count strength because it gained 7 long-term but lost 1 short-term. Meanwhile, energy, XLE, lost 3 long-term and 6 short-term, giving it a total loss of 9. With this, we not only can see who the leaders are today, but we can also see who the leaders were and who the leaders might be tomorrow or the next day. These 2 pieces of information are the big ones on the sector summary page, but there's a couple of other charts on the page that I do want to give a special mention to. We offer intraday prices for the sector ETFs, so if you are curious to see how the market is changing live, you can go and get 15-minute delayed data for all of the sector ETFs. Plus, we give you a little bit of information about their point and figure chart. You can see that it's in a column of X's and that its most recent breakout was on April 25th. Then the last thing that is on the sector summary page is BPI, or Bullish Percent Index. This is a topic for another day because it is webinars unto itself, and we do have webinars all on BPI. But the general idea is that it takes a group of companies, in our case sectors, and tells us what percent of these companies are on breakouts. That is a great tool for tracking market recovery because we can see when companies in a sector are starting to turn around and going on buy signals. Now, who would use this tool? The obvious answer is everybody. The more detailed answer is, here you go. This tool is great for beginner investors. The reason, you don't need to learn how to read charts. You don't need to learn how to compare 500 companies and find the best one. 12 things. 12 investments make up the entire S&P 500, over 80% of the stock market in 12 investments. So it makes it really easy to find where the leading section of the stock market is and then buy into that section, or find the up and coming section and buy into it. You can either buy the top sector or an up and coming one. Plus, in more stable markets, we have created a number of trading strategies that rebalance or trade once per week and follow a couple of simple steps. Those strategies you can follow or use as opinions. My recommendation, use them as opinions. Make your own investment decisions. But those strategies can be a great way of seeing the real results of how these sector strategies can do. I'll be honest, during uncertain markets or highly volatile markets like we're going through right now, those strategies are a little bit more tricky. But during stable, very kind of normal markets, those strategies have been my personal bread and butter. So beginning investors can really take advantage of this tool because it is a great way of exploring everything the market has to offer, but in a very simple way. You see a bigger number and you know that means the sector is stronger. But it can really be used by investors of all skill levels. You can find sector leaders to narrow down for finding the top companies, or use BPI as a way sectors begin to recover. Let's go and show you an example on the actual dashboard to answer the question, what is the top sector today? So once you're on the dashboard, it will look a little something like this. Personally, this is blinding me. I already have a bright light above my computer. I'm going to go here and turn on dark mode. So much better. There are lots of settings here if you want to add or remove things. Also, si quieres cambiar la idioma a español, puedes cambiar esto aquí. So, what we see here are the relative strengths of all of the sectors. If you want to know what's what, you can scroll down and all of the labels are right here for you, along with their daily price changes. Want to see what the top sector is right now? Click total count. It will sort it by highest to lowest. What I'm seeing is technology is the strongest, utilities is second place, discretionary is third place. The more you learn about sector rotation and sector relative strength, the more you can start to see things like, right now, sensitive companies. Companies that do really well when the market's doing well, but do really bad when the market's not doing well. Those are the sectors that are leading right now. Technology, consumer discretionary, which are the I wants in life, and communication services, things like Meta, Facebook, Google. This is a very simple example because what's the top sector? Bada bing, bada bam, bada boom. Technology. But what if I wanted to know what sector has gained the most strength over the past month? Sort by total count. Oh, hey, technology again. How about the past day? Utilities. How about compared to the beginning of the year? January 1st. You can choose a custom date and get to see how today's matrix compares against that one. And all of a sudden, there's a lot of changes. Generally, we see a handful of sectors gaining strength and some losing strength. Pretty straightforward. Now, there are trading strategies that we've covered over here in strategies. Again, those, in my personal opinion, work the best when the market is a little bit more stable. When things get really crazy, the reality is these strategies are not some $5 billion machine learning algorithm. They are simple steps that anyone could follow that we've shown to be lucrative and profitable in the past. We tell you all of the real results so that there is no hiding. So for example, we can sort here by 3-month return. Cool. This strategy in the past 3 months is down 0.71% with a max loss of 7.3%, while the S&P 500 is down 11% with a max loss of 14%. You can sort by 3-month returns, 6-month returns, 12-month returns, 3-year returns. There is no hiding behind any sort of, oh, we're telling you, we're only showing you the good stuff. All of the results are right here for you. Sometimes the reality is if the market's crazy, it's going to be really hard to try and predict for 1 week's time what investment is going to be a winner. But during more calm, straightforward markets, these strategies have been my go-to. So that is the matrix and the sector summary page. The next one I think is my favorite personal tool, the S&P 500 screener. The goal of this is show relative strength. Instead of it being for sectors, I want to see it for every S&P 500 company, plus more. So the screener is part matrix, where it tells us based on relative strength which companies are the strongest, but also has some additional stuff to let you filter these companies for certain conditions. Every company is given a relative strength score, just like the sector summary, but these scores are shown as percentages, where the higher the percent, the higher the score. Reason? Let's be honest. If I told you that Tesla is beating 390 companies, cool. If I told you that they're beating 68% of companies, all right, that's a little bit easier. So the numbers get pretty silly, so we give them as percentages instead. You do have the option, though, to see them as rank, actual score, percentage, percentile. So a couple different ways to view it. But it's not just relative strength. It also shows you stuff like the current point and figure column, as well as the most recent breakout or breakdown. So you don't need to look at a point and figure chart. If you're interested to know if the company is in a column of X's, it's in a positive price trend, or if it's on a breakout, it is there, straight, easy numbers. Also, what good would a matrix be without some momentum to go along with it? The other thing that is on the screener page are sector averages. These are interesting because it's a way of ranking sectors. Now you might be thinking that's what the sector summary page is for, right? Yes, you're not wrong. But there's a big difference. The sector summary page tracks the ETFs, these funds, and they don't buy the same amount of every company. What they do is that they will invest more in the bigger companies. So right now, I took a picture of the top 25 holdings of SPY. It's Microsoft, 15%, Apple, 14%, Nvidia, 13%, Amazon, 8.2%, Meta, 6.1%, Google, 4.5%, and so on. That's really great if you want to invest directly in that sector. But if I wanted to invest in Visa or Netflix, do I really care how Microsoft is doing? Do I want to give them the same amount of value? Not really. So the sector summary page, in my opinion, is way better if you want to invest in the ETF itself. But if you want to invest in a company, sector averages is your friend, because the sector averages are the average. It's equal weighted. Every company in the sector averages has the exact same value. So this is way better if you want to invest in the individual companies. Simple. 5% gain in the smallest company in the market, or 5% gain in the largest company, is still 5% gain. When we are dealing with buying an individual company, yes, it's nice to know that the sector itself is strong, but I don't want to give more value to the biggest companies in that sector. The little guys, they matter too. So the screener should be kind of used by, once again, everyone. But in my opinion, it can really benefit beginner investors that want to start diving into individual companies. ETFs are great because they're straightforward and easy, and they're a great place to get started. The next step might be using some fun money to buy a company that you think is cool. So beginning investors can find the best companies in the S&P 500 from relative strength on the screener quickly. Plus, you can narrow your search to find companies that have recently gone on breakouts. Why try and guess if a company is going to break its resistance level or not, if you can just look at companies that already have done so? But once again, investors of all skill levels can benefit from the screener. Get a watch list of companies from a friend, from r/Wall Street Bets, or from IBD, there we go, Investor Business Daily, not the movie site. Take your pick. If you find a list online of S&P 500 companies and you want to see only those companies, you can filter to only show those companies. Or you can find the strongest companies in the strongest sector. Narrow your search even more. Also, instead of finding the top company right now, see which company is gaining strength. Buy into the rising star, and plenty more. So To give us an example to test this tool out for ourselves, we're going to go find the strongest company in the strongest sector that has recently gone on a point and figure breakout. Ready? Let's go. So we're going to go here to the S&P 500 screener. By the way, this does take a few seconds to load because it takes 249,500 charts every single day to make this information. There's a lot of stuff, so it's earned the right to take a couple seconds to load. Alrighty, I have to zoom out just a little bit so that everything fits in one page. But what we see is that we have a list of the 500 companies in the S&P 500, its ticker symbol, its sector, so what sector it belongs to, and then its relative strength scores. So A is beating 36.87% of companies long-term, 52.10% short-term, for a total of 44.49%. Its price is currently in a column of X's, so its price direction is going up. It is on a point and figure breakout, and that breakout happened on April 23rd. It's a lot of stuff without ever having to look at a chart. So let's find the strongest company in the S&P 500 right now. Ready? Ta-da! Done. Sort any of the columns, and you'll get a list from highest to lowest strength. But let's take it a step further. I only want to see companies that are currently going up and are on a breakout. 305 companies. Oh, that's still a lot. Let's narrow it down more to only see companies in the strongest sector. We scroll past momentum down to sector strength averages. We can see the average relative strength score of a company within a sector. If we sort by total, we can see technology has the highest total count average at 64%. By the way, if you want to see something really interesting, utilities. Utilities, as far as the sector summary page was concerned, was the second strongest sector. Here, it's fourth from the bottom. The reason is because the biggest companies in the utility sector are the reason it's performing well. It's not because the average company, the average utilities company, is thriving. The difference between market cap weighted and equal weighted. But let's take technology now. We're going to go up here and we're going to filter by technology. Now we have 59 companies. Yes, that's still a long list, but let's make our lives even easier. I want to find companies that have gone on buy signals most recently. So I can sort here by signal date. And I can see that Gen went on a buy signal. Oh, sorry. There we go. It was flipped backwards. We can see that PayPal went on a buy signal yesterday. ADI went on a buy signal on, what was that? Friday of last week. Sorry, dates are weird. Along with AMAT, ANSS, CPay, CSCO, and more. Great. Where do I go from here? How do I choose between all of these? Well, there's the easy way, which is eeny, meeny, miny, that one. Or you can use another tool, custom matrices. We'll come back to custom matrices later, because custom matrices to me is kind of the vanilla ice cream of the investment tools. If you throw some vanilla ice cream on the table, everyone's probably going to be pretty happy. So this is the tool that can kind of be used by everything else. So we'll come back to how custom matrices can help us make our decision from here. But if all you wanted to know was what's the strongest company in the strongest sector that's recently on a buy signal? PayPal's the answer. It went on a buy signal yesterday. Before we get to custom matrices, the last tool I want to talk about is swing trade setups. The goal of this tool is make it easier to find companies based on support and resistance. Support and resistance levels are not just cool little lines that we can draw on a chart. They are psychological barriers as well. If you see that a stock's price went up to $100 and then crashed, the minute it starts to get to 98, 99, 99.50, 99.79, you're paying attention. Is it going to fall back down again? Is it going to go above $100? What is the meaning of life? The answer is 42. Thankfully, that one has an answer. For the rest of it, we need a little bit more. So support and resistance are real psychological barriers. And it is very common to see a price reach but not pass its support or resistance multiple times because of this. So we wanted to make a way to go through thousands of companies and quickly find companies that are a certain distance, either far away or close to support or resistance, and let you filter them based on how far they are. So this tool will let you see support and resistance barrier prices so that you can see what the actual dollar value of those barriers are and how far in percent or point and figure boxes the current price is from those barriers. You can also filter based on the distance or by point and figure chart stuff as well. Is it in a column of X's or uptrend? Or is it already on a breakout or breakdown? You're not sure where to start on this tool? We've kind of made it even simpler. We've created some preset setups under setup type that you can use. So who would use this tool? The reality is this tool is a little bit more kind of catered towards seasoned or active traders. So swing traders will find a lot of value in this tool, hence the name. You can filter based on how far the current price is from support or resistance to match your level of risk to reward. You want to make sure that there's twice as much reward as there is risk. You can filter based on that. You want to find companies that are approaching their resistance barrier but haven't passed it yet. You can do that as well. Or if you are a trader that enjoys using market structure, this idea of direction in the market is short-term, but also mid-term and long-term all at once. This tool is built with that in mind. Day traders can find a lot of value in this tool because you can find companies that you can use to then go in and study their charts or opportunities to buy in for options or other short-term trading opportunities. Plus, you can find companies that are reaching their support or resistance barriers but haven't passed them yet, either to bet that they will break through or that they reverse off of those barriers. And yes, everyone can probably use this tool to create a watch list of companies that might go on breakouts soon. This tool, once again, can be used on its own or in addition to many other tools. I felt like the best way of showing off the swing trade setups tool is to take the investors of all skill levels approach. Let's talk about making a watch list of companies for companies that might break out of their resistance. So over on swing trade setups, we can see that there are currently 1,945 companies. We are working on adding even more. Do I expect you to go through 1,945 charts? No. And that's the whole point of this tool. I'm going to make things easy and use the potential breakouts setup. What this does is it only looks at companies that are at or right below their resistance barrier. So they are not, they could already be or they could not already be on buy signals, but they're right below that resistance barrier. Now, point and figure charts work in a very interesting way. It is always black or white. It is in a breakout or breakdown, depending on what the most recent thing was. So it could be approaching resistance, but already be in a breakout. That's very possible. Let me show you an example. This chart here, we see that it went on a breakout back in February of 2024, went down a little bit, but not enough to go below its previous column of O's. So it's still in a breakout. Then it went up and was testing that level of resistance and then broke out above it. So that is an example of where we can have a company be on a buy or on a breakout already, but also approaching resistance. The reason that's important is because if I'm just looking to find a list of companies that I'm hoping go above their resistance barrier, what's harder? Going on a brand new breakout, changing out of a sell signal into a buy signal, or just saying I'm on a buy signal again? That one. So what we can do is we can say, I only want to see companies that are currently on a breakout. More chances that the trend will continue. If you want to learn more about that, market structure webinars would be your friend. All of a sudden, we have a list of 152 companies. That's a lot. Do I want to go through and add 152 companies to a watch list? No, not really. So I can filter to only show companies in technology. Oh, hey, we went from 1,945 companies to 7. I can work with 7. So I could go through here and create a watch list of these companies and set an alert for when the price goes above their resistance barriers. $468, $19.50, $95, so on and so forth. This is a very simple example of using this tool, and the hope is that you get to see how massive improvements and just simplifications of finding opportunities can be done in seconds. And the hope is that if you are past the point of needing or wanting these signals, you can see what data is available here and be able to figure out how this can simplify your process. Yes, we do have tools and ways of using our tools if you are brand new to investing or trying out a new strategy or way of investing for the first time. But if you are already an active investor, we're not here to try and tell you a new way to invest. We're just here to show you some tools that will hopefully simplify your process of investing, save you time, give you more opportunities. If you want to go in and you want to find companies that might reverse off of their breakdowns, go in here, go to breakdown, but say breakout. So market structure is still saying it's in a long-term positive trend, but their current price direction is going down and they're testing levels of support. The goal here would be that we can find companies that are about to reach their support in the hope that they bounce off that support and up. You want to make sure that there's enough positive room for growth because you're swing trading it. You can filter to show only companies that have more than 5% from support, or rather 5% from resistance. So the ways that this tool can be used are only limited by your creativity. Speaking of creativity, the last thing I want to show you guys is custom matrices. The goal of these is let you create a relative strength matrix of any companies of your choosing. You can compare up to 7 companies in a single custom matrix, and we save them all for you. So you can go to your profile and see all of the custom matrices you've created. You can review one from the past, or you can quickly update one that you've ran to see what the numbers are today. The beautiful thing, there's no limit. Create as many custom matrices as you want. Who could use this? Once again, everyone. You can find underperforming companies in your portfolio. Say you own 6 things in your account and you're not sure which one you want to sell. Go in and put them into a custom matrix and see which ones are underperforming. Compare a list of companies that you were considering. Maybe you got, 7 companies. Technology. There we go. Let's say you got 7 companies and you didn't know which one to choose from. Plug it into a custom matrix. Say you went here and you found some companies that you thought were cool, but you didn't know which one to buy. Go ahead, plug them into a custom matrix. Plug in PayPal, ADI, AMAT, ANSS, and Moo. And plenty more ways. Compare companies that you found using one of the other tools. We just talked about that. Any other screener or filter. For example, to show you ones that I've showed off in past webinars, we compared the Dividend Kings, 5 companies that are historically proven to show or to provide consistent increasing dividend payments over time. We've compared top companies in the utilities sector. More Dividend Kings, more Dividend Kings, more Dividend Kings. You'll notice a theme here. If I wanted to see this matrix as it looked on 318, I can click View and see those numbers. I can also click Rerun, and it will recreate that custom matrix. I should have changed the title. That's fine. The magic of live internet television. Not internet television, the magic of live webinars. So it will go ahead and rerun that custom matrix for us. And I'm betting you that it'll be done before I'm done answering this question. Jonathan, when I want to find a company to invest in for a long position, meaning buying it with the hope it goes up in value at the beginning of the day, will this be my best option along with my technical analysis? Yes, amazing question. So the screener updates after market close each day. So right now, there's only May 5th available. So if you wanted to use this for market open tomorrow, you would wait until the May 6th information is created, and then you can use that. So in my opinion, the best way to do this would be have your morning cup of coffee, go in and look at the tool, and have all of the up-to-date information. The further out you go from that, so say that you're investing tomorrow afternoon at half hour before market close. Now, all of this matrix data is almost a day old, which isn't crazy long if you're investing long-term, especially if you're going long on a position. But if you're day trading, if you're swing trading, you might want more recent data than that. So all of this data, I would say, is really helpful to start your morning off and then use throughout the day. However, we are working on creating more data that uses intraday prices. So pretty soon, we will have more ability to show you data that is changing throughout the day so that you don't have to wait until after market close or a few hours after market close to review something like the setup screener or the swing trade setups or the S&P 500 relative strengths. Great question. Alrighty, let's check back. Ta-da. This custom matrix is done. What we see is GRC was the top company and is now replaced by SCL, but both are still very strong performers. So There are a lot of tools that we have available here. And the beautiful thing is, most of them are only limited by your creativity. The examples that I've shown today are not the only ways they can be used. I just wanted to give a starting point. If you don't want to have to deal with charting, you don't want to have to deal with a crazy amount of analysis, but you want to take advantage of what that analysis has to give you, we do it all for you. We create over 250,000 charts every day to give you simple tools so you don't have to deal with that. The last thing I want to mention is custom matrices right now are limited to 7 companies per matrix. If you need more than 7 Rand, send us an email. We can run a bigger matrix for you. So that is a pretty detailed look at all of the tools that we have to offer here at Sectors Made Simple. Now, this is May 6th. We have an entire month of content, surprises, and announcements for you all. So I want to quickly highlight some of the things that you can look forward to throughout the month. First, more live content. This is the first webinar that we are doing in May, and every single Tuesday, we have a live English webinar at 4 p.m. Pacific, 7 p.m. Eastern. Throughout all of May, all of these webinars are available for everyone to join. The content will be focused on investing in uncertain markets or building a balanced portfolio that can handle uncertain markets. También, cada semana vamos a tener un webinario en español en los jueves, al mismo tiempo, 4 horas de Los Ángeles o 7 horas de Nueva York o Miami. Also, if you want to continue learning about investing using our tools, there's lots of opportunities to do so. We are working on finishing up a playlist of webinars that will be available on our webinar site, learn.sectorsmadesimple.com. Only reason why it's not up there yet is this is going to be the first video in that playlist. If you want to go a little bit more choose your own adventure style, explore all of the webinars that we have to offer by tag, type of content, or search for a keyword. Or if you want a little bit more guidance, there's 2 easy ways to do that. If you don't want to have to talk with a real human, you can talk with our AI and get a personal education plan based on what you are interested in learning about. That link is available on the Learn site, or you can find it down in the resources of this video. If you do want to talk to a human and not talk to an AI, don't worry, we're not going the way of only AI here. You can talk to a real human, aka me, whenever you'd like. You can book a one-on-one session with me, where I'm happy to talk with you about Sectors Made Simple, see how our tools can help you invest simpler, or answer your questions about the world of investing. It is seriously a pleasure to get to chat with you all and see how you are investing. And many of our tools have been created from somebody in our community asking, can I do this? And us saying, not yet, but let's make that possible. And stay tuned to our social media, Facebook, TikTok, Instagram, and email for lots more announcements and promotions scheduled for throughout the month. Thank you all so much for joining us and for making it this far into the webinar. We really appreciate your time. If you have any questions, you can email me at support@sectorsmadesimple.com. We hope to see you all back next week for another another webinar for everyone, as well as our Spanish webinar on Thursday. Thank you all so much. Take care. Bye.